Okay. So let's start with the practical question of AS16. Question number 4, part A. This is all the first question, and this question again is all your latest RTP questions. An enterprise has constructed a complex piece of equipment, qualifying asset, that is to be installed on the production line of a manufacturing plant. The equipment has been constructed over a period of 15 months. However, on installation, certain calibrations are required to achieve the desired level of production before it is finally commissioned. This process is approximately expected to take 2 months, during which test runs are made. Should the borrowing costs attributable to the borrowings pertaining to the 2 months test run period be capitalized? So their concern is not till the plant is completed. Their concern is for the 2 months. So should capitalization stop after the plant is completed, or can I continue and capitalize for the 2 months period? Okay. So friends, here, what is the rule as per AS16? When all the costs that are necessary or all the activities necessary to make the asset ready are completed or significantly completed, then the borrowing cost capitalization should stop. Which means when you speak about the capitalization in this case, the activity will get completed only after calibration is over, because without calibration, the asset is not ready for its intended use. The asset is not yet ready for the purpose for which you are wanting to use it. So what happens here? In the given case, the capitalization will continue for the 2 months period because the asset has not yet been completed for its intended use. Is that clear? So let's go and see the answer. As per AS16, borrowing costs. Capitalization of borrowing costs should cease when substantially all activities necessary to prepare the qualifying assets for its intended use or sale are complete. On installation of the equipment, an evaluation has to be made whether to conclude that all the substantial activities are necessary to prepare the asset are complete. After the equipment has been installed, it is usually tested and adjusted for commercial production before it is finally commissioned. So until the asset reaches the stage where it is ready for commercial levels of production. Okay, we are using the word ready for production. It is not appropriate to conclude that all activities to prepare the asset are complete. Right? So here, the last line becomes your key. Until the asset reaches the stage where it is ready to support commercial production, it is not appropriate to conclude that substantial activities are complete. Therefore, the borrowing cost incurred during the normal period of test run shall be capitalized. Okay, so in this case, the 2 months period, we can go ahead and capitalize. Next. Yeah, please take down the hints. The answer key will also be shared to you in the PDF for reference. Can we continue? Next. Should capitalization of borrowing costs be continued when the qualifying asset has been constructed, but marketing activities are still in progress? So does marketing activities amount to completion of the asset? No. So here capitalization should be completed or should be ceased when the asset is substantially ready for intended use. As per the provisions of AS 16, the capitalization of borrowing costs should cease when substantially all activities necessary to prepare the qualifying asset for its intended use or sale are complete. Further, the standard explains that an asset is normally ready for its intended use when its physical construction or production is complete, even though routine administrative work might continue. If minor modifications of a property as per user specification are all outstanding, it indicates that the activities are substantially complete. So it is just an example. Not if you are able to give this example, well and good, but not necessary that you have to quote the example. Therefore, when physical construction of the asset is complete, substantially all the activities necessary to prepare the qualifying asset for its use are complete. In the given case, the borrowing costs pertaining to the period during which marketing activities to sell the asset are still in progress should not be capitalized as a part of the asset. Right? So this summarizes question number 1. Please note the hints which are relevant. Next, question 5. Vital Limited borrowed an amount of 150 crores as on 1/4/2019 for construction of boiler plant at 10% per annum. The plant is expected to be completed in 4 years. Since the weighted average cost of capital is 13% per annum, the accountant capitalized 19.5 crores. So if you see 19.5 crores, let's see where the calculation comes from. For the accounting period ended 31/3/20. Due to surplus funds out of 150 crores, income of 1.5 crores was earned and credited to profit and loss account. Comment on the above treatment of the accountant with respect to the relevant accounting standard. First question. How was the 19.5 crores calculated? Okay, including the amount earned. Okay. Second, what is the percentage that we should consider when we are doing capitalization of borrowing cost under AS 16? Is it the cost of the loan which is 10% or is it the weighted average cost of capital which is 13%? The standard says we are only going to take weighted borrowing cost. Hence, weighted average cost of capital is not relevant. Okay, so this 13% is not going to be relevant for us. What is relevant for us is the cost of borrowing, which is 10%. So therefore, the cost that should have been capitalized, okay, including the income portion, first let us calculate, is 150 crores into 10%. Okay, 150 crores into 10%, which is 15 crores in place of 19.5 crores. So they have actually calculated 19.5 crores based on 13%, which is wrong. Again, further, out of this 15 crores borrowing cost, 1.5 crores has been earned as income from temporary investments. Therefore, we need to subtract the same, and therefore 13.5 crores shall alone be eligible for capitalization. 13.5 crores shall only be eligible for capitalization. So let's see how we present this in the answer format. As per A16, borrowing cost, it states that to the extent the funds are borrowed specifically for the purpose of obtaining the qualifying asset, the amount of borrowing costs eligible for capitalization on that asset should be determined as the actual cost of borrowings incurred on that borrowing less any income from temporary investment. So the word here is actual borrowing costs incurred. Actual borrowing costs incurred. Right? Just give me a minute, friends. I think there is a network issue.